I don't have the data here, Nick. You probably know it, at least in your brain, better than I do. But the multiple of housing to income, house prices to income, has got to be substantially higher than kind of the past
Oh
30-year
yeah, it's
median, right?
crazy. The main metric I use is looking at home values to the average worker wages in an economy. And, obviously it depends on where you are, but pretty much in every market, we've seen a massive increase. On average in America, I think right now we're around 6 to 6.5 times what the average worker makes in a year of what a home value should be. The long run average is closer to 4. And there's certain markets that are just out of control. I mean, Austin, Texas, I mentioned, is one of them. Salt Lake City, Denver, Seattle. These are markets where you look at that relationship of home prices to wages and it makes no sense. And for so long, people said, well, oh, that's okay that it doesn't make sense because interest rates are low and there's all these wealthy people who work in tech who are just going to buy these homes. But no longer are those two things a reality. And now, ultimately, you're going to start to see the fundamentals of the local market matter a lot. So it's not enough to say anymore, oh, the wage growth isn't good enough in Austin or the job growth isn't good enough. People said, well, that didn't matter the last 3 or 4 years because of all these people moving in. The situation's changing very rapidly and the local fundamentals are really important. As you said, it's actually kind of simple. It's almost beautifully simple, the housing market. What's the home price? What's the mortgage rate? How much money do people make? And what's the relationship of home building to job growth? If you know those metrics, you can feel pretty good about projecting whether the value of your housing market is fair and fundamentally supported.
Yeah, and that's kind of my main point here, where it seems like over the past decade, we had these new props introduced that would be pushing, housing prices ever higher and supporting them. But now those props are being taken away, right? And I said, it all comes down to affordability. Well, there's two big dynamics going on. One is what you said is just sort of a natural boom bust where high prices are the cure for high prices, right? Prices get so high that people eventually say, okay, I'm not going to move to that market anymore because it's now too richly priced. And those high prices also attract developers and builders who bring on new inventory. And eventually, the increased inventory brings down prices in general too. But you've got that going on, which is just sort of the natural cycle. And at the same time, you have the Fed out there now actively trying to dampen demand and to create a negative wealth effect to get people to spend less in its efforts to bring inflation down. So you actually have two really powerful forces there that are conspiring to try to make, housing prices a lot lower than they are today, correct?
That's correct. Those are some major headwinds. And I don't know if people truly appreciate how big those headwinds are. And, I feel I think the situation is this, and I don't want to try to scare everyone who's in the housing market. Like if you own a home, it's not necessarily going to be doomsday, right? Especially if you're someone who's owned that home for 5 years or 7 or 8 years and you've built up a lot of equity, you can probably afford to withstand declines in values. But I think it's going to be the people who bought in the last 2 years, whether it be an investor or a new home buyer or someone who bought with an FHA loan with low money down. These are the people that unfortunately are going to be most in the crosshairs of this tightening that's going on right now. And, I think nationally home prices can go down by more than 20%. And I think that's up to 40% in certain markets that are most at risk. And so there's going to be a lot of pain produced in the housing market by these shifts that are occurring. And, hopefully, the people who bought over the last couple of years had a good down payment and didn't overextend themselves when they made that purchase.
Right. Or got a fixed mortgage and aren't in
Yes.
danger of having it adjust upwards into the much higher prices that we have today, or may have even more so tomorrow. And I also just want to add too, in terms of there's a third one too, which is, I talked about how the Fed is raising the cost of capital here by rising interest rates, but it is by depressing demand, the Fed may potentially be bringing us into a recession here. And so if it turns out that there are substantial job losses connected with a recession, well, that's another big issue that's going to be yanking down those housing prices because you're just going to have fewer buyers out there. If you enjoyed this video clip, click here to watch another one you should like.